Let's head now to the eNCA Money Desk. Devin Murrigan joining me. Hi, Devin. So we're waiting to find out if we're going to slide further into junk status this evening.
Yes, we are, Sally. Good evening. And we could very well have that situation. Moodys and S&P Global published their rating reviews for South Africa this evening. The country has been in sub-investment grade with all three major credit rating agencies. But what does this essentially mean? Well, a lower grading means that the country is seen as a riskier one to lend money to. Now, Sally, first of all, a credit rating essentially assesses a country's ability to pay back debt. It looks at whether the economy, or in this case the country, is financially healthy and has a sustainable outlook. And as you know, this country's economy has had anemic growth for years, which brings us to where we are today. And if you take a look at that graphic, you'll see that all three of these rating agencies have us on junk status. There's two outlooks which are negative. Hopefully that negative outlook this evening by Moody's wouldn't turn into a downgrade. And the main reason why we are concerned about a further downgrade is because as we move further down the downgrade scale, the higher our borrowing costs become. And we can't have that given our debt situation, because the cost of borrowing money cannot worsen simply because we have very little money in the coffers. But here's economist Kevin Lings on that.
It would help us enormously if we had a better credit rating, even if it was just one notch higher, because in all probability that interest cost would start to ease off.
Right, so Devin, I know the answers often come through quite late in the evening, the decisions, but what are the main considerations as they evaluate us?
Yeah, well, essentially, they would want to know if we are on a path to restoring this economy to a healthy financial state. Now, the coronavirus had certainly worsened the economy's prospects. We do have the reconstruction and recovery plan in place. There's a concerted effort to increase investment. But to answer your point, those points in front of you there are one of the biggest considerations that they look at. Is this economy growing adequately enough, and do we have growth-enhancing policies in place? Depending on who you ask, many will tell you this country still is struggling with that aspect. We are not growing, we're not getting business activity up, and therefore not collecting tax revenue. Secondly, how are we spending? You'll know that at the center of that is one big issue, the wage issue, public sector wage issue, which is still in court. And we do indeed spend a lot of money out of the fiscus on public sector wages. And then, of course, we've heard so much about our escalating debt, which is projected to be around 95% of GDP as we approached 2025. These are the main points to see whether or not this economy is financially healthy. In fact, here's Kevin Ling once again on those big factors under consideration.
The fiscal position, the fact that government debt was rising at a rapid pace, the fact that we were not generating meaningful increase in economic growth, job creation had all but disappeared, that the institutional capacity within government had deteriorated, that the state-owned enterprises represent an ongoing fiscal risk for government, the contingent liability that they represent has become substantial.
So those review ratings by both Moody's and S&P due later this evening. They're not compelled to release them, but of course they are scheduled to do so. So to the markets now. Local stocks took a beating today. Financial and retail stocks in the red. While globally investors are uncertain about the stimulus package in the United States, locally the focus is on the rating agency's decision today. Well, market analyst Katlego Pule is from 27-4 Investments. He joins us now. Katlego, thanks very much indeed for talking to us. Why were we so in the red locally today? I see only Naspers and Prosus pulling into the green. Was this international or domestic factors?
It was a bit of both. From Naspers Prosus perspective, there was just a buy-in into Tencent in the Hang Seng, which ended up 2.5% at close of Hang Seng, and that had a filter effect on Naspers and Prosus on our side. And just on the other side, on our stocks, local stocks, especially cyclicals, were kind of like under pressure, given the fact that they've run so hard. There was more reprieve, given the fact that they've run so hard and they're testing their fair value. Some of the counters are testing their fair value valuations. Yeah.
No, indeed. And then we have the situation with Tiger Brands. I mean, they appear to have been hit severely with a 73% fall in profits. And it's interesting with retailers because, you know, there was a high demand for groceries during the COVID-19 period. What's the story with Tiger Brands and their fortunes there?
With regards to Tiger Brands, I think that there was an impairment push through. That actually hurt a bit of their earnings, but the HIPS was actually down to 23%. And the thing is, they're having problems they had problems because of COVID, and they couldn't. There's some input cost increases they could not actually push through to the consumer, and therefore they had to take it on the chin. But the revenue overall was up 4%, with other costs incurring because of COVID regulations. They had to follow protocols and regulation, which increased some of the operating costs. But though the pressures on, there were some pressures on margins in some product offerings that they have. But overall, it looked good. And also they declared a dividend of 5.37 cents.
That's interesting. Now, listen, we all remember the Deloitte and the old African bank saga there. Deloitte this evening breathing a sigh of relief because some of the auditors have been cleared of dishonesty. Did you take a look at that story? What do you make of it?
The thing is with that, the verdict itself did not attack or did not hold the two auditors in charge, the two auditors accountable or guilty of anything, but more the guilty verdicts were more on the technicalities and just on the Deloitte issue. It's more of a corporate culture. The thing is, they have to also face another dilemma again against the regulator itself, whereby they need to stand on the audit work done on Steinhoff, on whether or not that followed processes and proper processes there. So in terms of them, it was more a corporate presence or trying to ramp up or to improve their corporate image.
Before I let you go, so we've got this credit ratings decision coming up by both Moodys and S&P later this evening. Should the Rand be afraid of what's going to happen here? Will there be any influence on our local currency?
The currency did weaken a bit during the course of the day, just after 1 p.m. To hit 1540. Around 1540. The ratings agencies, I don't think it's more on the outlook side of things. I think they'll take cue from the budget itself that will be tabled in February, because that will then give us an indication of how much progress have we made, given the fact that not so long ago we had our midterm budget, whether we made inroads in terms of the cost cutting that were tabled in the midterm budget, and also just on the court verdict around the wage bill, which is a big obstacle or a big thing that the government should then be able to overcome.
All right, thanks very much indeed, Katlego Pule there from 27 for Investments. All right, let's end off by taking a quick look at those indicators. So with the Rand at 15.35, Sally, that's where we leave the numbers for now.
When do we expect that Moodys and S&P decision?
Well, it usually happens, if history is anything to go by, after the markets close late into the evening. Remember, the Moodys review is highly dependent on what's happening in the US, and that usually comes out very, very late in the evening. And let's see if that follows tradition again this year.
Thank you very much, Devin Morrigan. Still ahead.